Calling all entrepreneurs, get ready because keeping more money in your pocket than you give to Uncle Sam is always the goal. Come on and get ready for tax season. Also, a badass businesswoman creating a unique mark in the business world right here in the DMV. So get ready because it's time to level up.
5, 4, 3, 2, 1.
Hello, I'm Denise Roberts, and welcome to Level Up, the bully pulpit for small business in the DMV. The franchise model has been called the greatest business model ever invented. It's allowed people all over the world who wanted to own their own businesses to do just that. Franchise or startup. Franchise or startup. My next guest is a badass businesswoman, serial entrepreneur who owns multiple franchises, and she is doing her thing right here in the DMV, and I'm proud to call her family. Toya Evans, owner of Healthy Living Ventures. Thank you for being here.
Thank you, Denise.
Well, I'm really excited to share, or for you to share, what Healthy Living Ventures is all about.
Sure. So Healthy Living Ventures is a business that my daughters and I started. And we started it with the intent of bringing healthy lifestyles and healthy products to underserved markets. And what better place to start than Prince George's County?
And you guys are from Prince George's County, right?
I am. They claim Northern Virginia because I came out of the tech world. We lived over there for a long time. But I am a proud graduate of Friendly High School in Prince George's County.
Absolutely. Okay, wonderful, wonderful. So Healthy Living Ventures is comprised of multiple businesses.
Correct.
Okay.
We have 3 franchises now that are in the portfolio. Tropical Smoothie Cafe, Hand and Stone Massage and Facial Spa, and our newest one that we're so excited about is the VO Med Spa.
The VO
Med Spa. We just signed that deal at the end of the year.
Okay. Now, you know, when early on, or when I was first introduced to you all as business owners, you had 1 or 2 tropical smoothies.
We had 1. We have 6 now, tropical smoothies, and we have 2 Hand and Stones, and we will be developing 3 of the VO Med Spas. All of those will be in Northern Virginia.
Okay. What made you choose tropical smoothie?
Well, we were looking for, obviously, a franchise, first and foremost, and then second, we wanted something that fit into the healthier lifestyles of products, and we knew that product from Northern Virginia, and it also was at my daughter's school. They went to Old Dominion University, both of them, and so they had one on campus. So very familiar with the brand and what they sold, and then we talked to them. And that's very important if you are selecting a franchise, is to make sure you are comfortable with the brand and you're comfortable with the leadership of the brand, because you're giving them your money every single week, and you want to make sure that your vision aligns with theirs. And that happened. We live with all of our brands, but with Tropical Smoothie, we felt very comfortable coming in. And we were also able to convince them that Prince George's County was a place where they wanted to plant their flag. They had many all in Northern Virginia, and they had just 1 in Anne Arundel County, 1 in Howard County, I believe. But they did not think initially that Prince George's County was their demographic.
Okay.
And we had to convince them otherwise, and then others have opened now, and they really see the power of the black dollar and what it has done for the brand, because it literally helped to double their average unit volume, or their AUV.
Okay, and you said convince them. So does that mean that brands won't just let anybody open up a franchise anywhere?
That is correct. They have market development maps, and so they do a lot of demographic studies of, and segmentation, where they create this persona of their customer or their customers, and then they look for markets that have these folks. So obviously, they did not think initially, and I'm not saying Tropical Smoothie, I'm saying lots of brands.
Okay.
When we talk to them and they say, where are you from? We say, we're from the DC area, and they immediately say, oh, you should open in Arlington, or you should open in Bethesda. But they never say, hey, how about let's go to Greenbelt? And so it's always that type of conversation where you're convincing them, hey, you should look at these shopping centers, you should look at these things, and then they will sometimes acquiesce to yours, and we were just being convincing.
Okay.
We've been called the queens of asking questions until we get the right answers. But I felt very strongly, my daughters felt very strongly that Prince George's County was a place that, one, needed services, and two, that could do well if we could bring it here. And so we've been very intentional with all the brands that we talk to that, you know, this has to be at least a place to plant the flag, if it makes business sense.
Okay. Okay, so let me back up a little bit. What does it mean to franchise?
So franchising means that for a fee, initial fee, you get the rights for operating procedures and use of the brand. And so that means that rather than us creating, you know, Toya's smoothie shop and having to build everything out, my logo, my operating procedures, find my suppliers and manufacturers, that by paying a franchise fee, I get all of that. And essentially you get a playbook. And I like to tell people, if you can follow rules, you'll be a great franchise owner.
Okay.
If you can't and you are always kind of on the fringe of doing things, you probably shouldn't do a franchise because it won't work. They probably wouldn't even let you in because they ask a lot of questions initially to qualify you if you would be a person to follow rules, because that's what it is, a set of rules.
Okay, okay. So what are some of the other benefits when it comes to franchising versus just developing your own thing?
Well, first and foremost, I mentioned it already, that you don't have to think about how to build a business from scratch. That's one. The second thing is you have a proven concept, because in order to franchise, the franchisor has to at least prove that the idea is viable and they have operating procedures and they can show that it could be replicated. And the third is really for financing. You know, it's a lot easier to get financing for a franchise than it is to get your own individual business. Doesn't mean you don't have to go through the same steps. You're still, you know, doing business plans and doing your studies of where it might work best. But a lot of the franchises automatically petition to the Small Business Administration to get their franchise approved. And then banks look a little bit more favorably upon that because they also have a track record. And they can prove that to show that if someone follows their playbook, they are likely to be successful.
Okay, okay. So what are the steps in, you know, if someone wanted to, you know, open up a franchise? I know they have to choose their brand, but, you know,
I'll have to give you the cliff notes.
Okay,
on that one, because it's a lot. But initially, you do your research, and I like to tell people to find something that speaks to you, because at the end of the day, you've got to be able to get up when you don't want to get up. I mean, unfortunately, I've had 4 break-ins in one of my locations at 2 or 3 o'clock in the morning. Like, do you want to get up in the middle of the night and go deal with that?
Right.
Or, you know, those kinds of things. So find something that you like to do, that you strongly believe in, because you're investing not just your money, but your time, your talent, and everything. So that's first.
Okay.
And then making sure that, you know, whatever that particular business might be, that it aligns with your business goals in terms of entering the business, in terms of exiting the business, because you kind of always have to think with the end in mind.
Okay.
What would that do for you? And then just do your research. My daughter likes to say, you know, start before you're ready. And we really do preach that. We have a class that we started back in 20 called So You Want to Buy a Franchise. And it really came about as a culmination of all the types of questions that we got from people if they would see us in our businesses, or we post something on the social media and they would reach out. I just have one quick question. And it's never a quick question, but it really is getting yourself prepared, lining your finances up. We have a lot of people who say I don't have the money to do it, and yet you do. You just have to prepare yourself.
Okay.
And then I think, you know, when the universe aligns and you're ready, I always say do it. Don't talk about it.
Okay, so now out of all your franchises, how many are Prince George's County?
5.
5. Okay, and the others are in Northern Virginia.
2 in Northern Virginia, 1 in Montgomery County, and then we'll have 3 more in Northern Virginia once we open the med spas.
Okay. What's beyond that for Healthy Living Ventures?
Well, we also signed a deal at the end of the year for a 3 development deal in Knoxville, Tennessee. So we're working on real estate right now, and that will be for the Hand and Stone Massage and Facial Spa brand.
Okay.
And we're just constantly looking for the right franchises and opportunities to expand within the brands that we have already.
Okay. Okay. Toya, you know, these shows could go pretty quick. I really want to thank you for coming on the show today. I do want you to give some contact information if anybody wants to get in contact with your company to find out, you know, more information.
Sure. You can find us on the web at healthylivingventuresllc.com. And if you're interested in taking our course, that is healthylivingventures.teachable.com. And the course is called So You Want to Buy a Franchise. And we'd love to work with you. We work with many people so far in helping them achieve their franchise dreams.
Oh, that's awesome. That's awesome. And again, it's a mother-daughter team.
That's it.
That's a success story right here in Prince George's County, right here in the DMV. We're really glad and wish you all the best. And we'll look forward to having you back and seeing, you know, what's next or what's going on. Giving
Absolutely.
us some updates.
Thank you so much. I appreciate the opportunity.
You're welcome. Thank you. I want to thank Toya for joining me and giving us such great information on being a franchise owner. Don't change the channel. Level Up. We'll be right back with the King of Taxes.
Going to cheerleading camp next to the abandoned insane asylum, it's like throwing your blood away.
50% of Americans like watching blood get spilled in horror movies, but only 3% donate it. Now that's scary.
Welcome back and thank you for tuning in to Level Up. I know it's not April 15th, but believe me, time flies. And if you haven't started, it's time to do your taxes. Taxes is not my favorite subject, but this is about how to keep as much money in your pocket while still working with Uncle Sam. Joining me today to talk taxes is CPA Tony King of King and Associates. Welcome to the show.
My pleasure. Thanks for having me.
So, you know, it's Black History, and I know there's a little bit of history behind your business, and I wanted you to know if you could just share really quickly the history behind your business.
Sure. Our firm was started in 1957, which means we are the oldest minority-owned CPA firm in the state of Maryland. And no, I'm not that old. To be in business for 60 plus years now. But my father started the firm.
Okay.
He is recognized as the state of Maryland's very first Black CPA.
Okay.
And the 45th in the entire country.
Wow.
So he has a lot of history nationwide in terms of minority CPAs.
Okay.
There's several firsts that he enjoyed.
Sure.
He was the first Black CPA to be named chairman of the state board. That's a gubernatorial appointment.
Right,
so there's a
right.
whole series.
Okay.
But anyway, my brothers and sisters and I followed in his footsteps.
Yeah, and that's
and we have a family full of CPAs and attorneys.
a family full of CPAs and numbers crunching going on, right? Okay, so let's just talk about business and taxes. How do you determine which structure your business should be when you're first starting out?
Great question. The choices are sole proprietor, and I'll just briefly talk about each one of them. Sole proprietor, a partnership, an S corporation, a C corporation, and LLCs. And even within the LLC structure, there's a single member LLC and a multiple member LLC. LLCs are relatively new in today's business environment, although when I say new, we're talking about 30, 40 years as opposed to corporations, 300 years, et cetera. LLCs are very flexible and they are governed by state law, okay? Let's go back. Sole proprietor, just as the definition says, you are the only owner of the business. And there are certain inherent risk, pros and cons with each particular structure. Sole proprietor does not provide the owner with it provides very little liability protection. Meaning that if something goes wrong in the business, your personal assets are in jeopardy. Your home, your car, your retirement accounts, et cetera, et cetera. Well, first thing people say, well, I'll buy insurance. Well, in today's environment, you can't buy your way out of a lawsuit. So we say, depending on your levels of risk, a sole proprietorship is not the best type of formation for you.
Okay.
Perfect example. You're a school bus operator. And you've got 25 kids that you transport every day. You do not want to be a sole proprietor with 25 kids in a school bus.
So is the next level up a LLC?
You could jump. I would say the next one is a partnership.
Okay.
And then by definition, by Webster says, a partnership must be at least 2 or more people. It could be 222 people, but it must be at least 2 or more people.
Okay.
Partners are similar to sole proprietorships in that they bear the risk of the business. Partnerships are interesting, though, because partnerships do not pay taxes. Oh, look at that expression.
Oh, yeah.
Partnerships do not pay taxes. Partnerships are known as pass-through entities, flow-through entities.
Okay.
Meaning that the profits and losses, income and deductions, flow through to the partners. And the partners pay the tax. So there's only one single level of tax at the partnership level.
Okay.
You and I go into business, we create a partnership, and we share everything 50-50. At the end of the day, end of the year, whatever the profit is, I'm going to pay tax on 50% of that, and Denise is going to pay tax on 50% of that. But the partnership itself does not pay tax.
Okay, and then you have entities that pay taxes quarterly.
Those are usually quarterly payroll taxes.
Okay.
That's a lot of, and
That's different.
that's a lot of problems for small business owners in
Okay.
paying their quarterly income taxes and
Okay.
quarterly payroll taxes.
Okay, how so?
It's very easy to use the government's money, meaning the money that you withhold. Let's say payroll taxes, for example. You withhold $1,000 from your employees, and by law, you're supposed to turn that over usually within 3 business days. Well, you do that week after week after week, and cash flow dries up, and all of a sudden you're sitting on $10,000 of employee payroll taxes that you know you're supposed to turn over, but the rent is due tomorrow. Okay? So some employers make the mistake of floating the payroll tax money.
Okay. Okay. So, how can a small business get prepared for tax season?
Well, long before tax season, hopefully they have already established their financial management and accounting system.
Okay.
Okay. Either they are knowledgeable enough to configure and set up a QuickBooks accounting system or a Peachtree accounting system or some other microcomputer or networked accounting system. If they are not, then I would suggest they seek the services of a CPA firm.
Okay.
We specialize, most CPA firms specialize in information systems. Just as a side, I have a master's degree in information systems, so I do most of the firms, or almost all of the firms, technology consulting and implementation work. The other partners, one has a master's degree in taxation, another has an MBA in finance and accounting. So we each have our specialties, but IT is something that most small businesses don't think about until it's too late.
Okay.
So the technology component is very, very important
Okay.
in the success of a small business.
Okay. Okay. Are there any changes in the tax code for the 2022 tax year that we need to be aware of?
There are changes every single year. Some are more proficient than others. If you think back to the tax changes of 2017, that was probably the most significant tax law change in several decades.
You're talking about under the Trump administration?
Yes.
Okay.
Yep, exactly right. It has a long name, TCJIA, et cetera, et cetera, et cetera.
Okay.
But most of us, we have all now been through at least 4 years of those tax law changes, and it made some significant changes in what you and I have been used to for like the last 20 or 30 years.
Okay.
One, the personal exemption was eliminated. You used to be able to deduct around $4,000 for the husband, the wife, and the 2 kids. All right, so right away, taxpayers were missing $16,000 worth of exemption.
Wow.
Okay, that particular law changed the amount of state and local tax that taxpayers could deduct. The combination of your property tax and your state income tax that you pay to the state of Maryland was limited to, and is still limited to $10,000. And I'll just give you 2 or 3 quick examples. So you have a family of 4. They're missing $16,000 right away. Okay, 4 times the husband, wife, and 2 kids. Let's say the husband and wife both have high-paying W-2 jobs, and they pay quite a bit of money to the state of Maryland. So, and they live in a neighborhood where the property tax is $10,000, $12,000. They have a 5,000 square foot home, and it's taxed very high. So they are used to pay $10,000 for the real estate tax, and they used to pay the state of Maryland $25,000 in state income tax. So that's $35,000. That's capped at 10. So they lose $25,000 in tax deductions, state and local tax deductions, and they lose $16,000, or they've lost $16,000 in those personal exemptions. Those changes in 17 are still in effect today. Most of the 2017 changes will expire in 2025.
Okay, so they're expiring.
So we still have a few years of this to go through.
Okay.
Now, it's not all that bad because in exchange for eliminating quite a bit of those deductions, the tax rates themselves the tax brackets were lowered. All right. So if you were in the 37% bracket, now you're in the 34% bracket. The standard deduction, which is what the IRS automatically allows everyone, whether you're a homeowner or not, they doubled the standard deduction. Okay. It used to be, it's upwards of $24,000 now for plus or minus a few dollars for age 65. But a married couple can get a standard deduction, even if they don't own a home, of up to $24,000 and change. So that was pretty significant there too.
Okay.
Right.
Okay.
The 2022, there are some changes that aren't as pronounced as the previous ones. One that expired in 2021, you used to be able to claim up to $300 of charitable contributions, even if you did not itemize. Okay, itemized deductions versus standard deductions. You can no longer claim charitable contributions only if you itemize your deductions.
Okay.
The credit for children under age 16 and under. Last year, 2021, you could get up to $3,600 tax credit for children between the ages of birth and 6, and now that's down to $2,000.
Okay.
So there are some changes like that. Most Americans, most taxpayers won't feel the brunt of that. They won't feel the brunt of those changes unless they are unless they have that picture.
Okay. What are some of the problems that you see with small business owners when it comes to taxes?
Primarily not staying in touch with their professionals throughout the year. Okay. I mentioned that choice of entity is very, very important because each one of those entities have tax implications. There are pros and cons. I mentioned the C corporation. That's the typical corporation. That's your Fortune 500 companies. That's General Motors. That's Ford. That's Microsoft. That's IBM. That's Johnson & Johnson. C corporations, their biggest fallacy for a small business is that there's a double taxation component. The corporation itself pays income tax, and then the owners of that corporation also pay income tax. So there's a double taxation. And I'll just say, I have not seen a new C corporation in 20 or 30 years.
Okay.
In other words, people don't come to King & Associates and say, hey, Tony, I'm starting a new business and I want to be a C Corp.
Okay.
I'll say, no, you don't.
Yeah, right.
No, you don't.
Right,
You know,
okay.
we need to look at S Corp or LLC type entities.
What about some of the, you mentioned before, paycheck protection plan and employee protection credits. Do those still exist?
Yeah, well, the PPPs, Paycheck Protection, that was initiated right after COVID, March of 2020. And the government said, we will give you these loans if you promise to maintain your payroll levels. You know, the businesses are hurting, we know that, but don't lay off your employees. We are giving you these loans to maintain your existing staffing levels. Later on in the program, those loans became completely forgivable. So it turned out to be free money. And not only that, later on in the program, the IRS declared that those forgivenesses of loans did not generate a taxable transaction. So it was a win-win for small businesses beginning in March of 2020. Fast forward, during the 2021 Consolidated Appropriations Act, the ERC, Employee Retention Credit, was implemented. And as the name indicates, we will give you tax credits, we meaning the government, for all of the employees that you retained during the pandemic. And basically it says, what was your payroll before the pandemic? 2019. Show me that you prove to me that you retained your employees. Show me your payroll records in 2020 and 2021. If you look at 2019 as the benchmark, this is what I was this was my staffing level in 2019. The pandemic hit, and because of these government programs, I was able to maintain my staffing levels.
Okay.
Therefore, I am now eligible for payroll protection loan forgiveness and the employee retention credits.
And those are for W-2 employees?
W-2 employees.
Not 1099 or contract employees?
No, because you actually have to prove to the government the W-2s and the W-2 wages, the wages that they're looking at are in the form of a W-2.
Okay.
So you have to give them your payroll records for 19 and give them payroll records for 20 and 21.
Okay, really quickly, could
Sure.
you kind of just rattle off just a few things that small business owners can write off?
Oh, the key term in the Internal Revenue Code is anything that's ordinary and necessary for the type of business that you're running. Ordinary and necessary.
Okay.
Salaries, rent, utilities, advertising, website development, travel and auto. All of those are ordinary and necessary in the type of business that I run and you run.
Okay.
Depreciation is a big factor for small business owners. Depreciation allows you to, Section 179 depreciation allows small business owners to write off the entire cost of an asset in 1 year as opposed to spreading it out over 5 to 7 years.
Okay.
A huge cash flow tax break for small business owners.
Okay. Really quickly, if anybody wants to get in contact with you for more information or have any questions,
Sure.
how do they reach you?
Our website, www.king-king.com. That's king-king.com.
Okay.
And we're at 410-486-4500.
Okay. Thank you so much. I want to thank Tony King from King and Associates for giving us all that great tax advice. Don't go away because Level Up will be right back.
Life doesn't always give you time to change the outcome. Prediabetes does. With early diagnosis, prediabetes can be reversed. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
If you're starting a new business, you should take every opportunity to give your new enterprise the best chance of success. Use these top business tips and advice to help your business succeed. Number 1, market research. If you want to sell something, are people going to buy it? So you need to know your customers and who your competitors are. Chances are other companies are already selling what you sell. So how are you going to set yourself apart? Number 2, a business plan. This is very important because it is the roadmap to how you start, run, and grow. And there are 2 types. One is the traditional business plan, which is very detailed and comprehensive. This is the one lenders and investors want to see. The second type is the lean startup plan, which is high level, has the key elements that can serve as a temporary guide to help get you started. Next, gotta choose your business structure. Meaning, is your company going to be a sole proprietorship, a partnership, an LLC, or corporation? Here's where you want to consult a tax professional. Number 4, once you choose your name of your business, you need to protect it. And there are 4 ways to do that. Register your business with the state for state level protections. You can also trademark your name, which protects you at the federal level. You can choose a DPA for your business or your doing business as name, and register your domain name, which protects your website address. And finally, open a business bank account. Start operating your business as a business. It's really important to keep your personal money separate from your business finances. Now, there are so many tips out there for starting a business. The goal here, though, is for you not to rush into it without relevant information and without key things in place. And that's our show for today. Again, I want to thank my guests, Toya Evans and Tony King. This show and previous episodes are posted on our YouTube channel, Level Up CTV. So make sure you go out there and hit the subscribe button. Also, join our Small Business Club for a chance to showcase your business on this show. Send an email with the link to your company website to levelup@pgctv.org. If you would like to see your business on this show, take a selfie. That's a picture of you and your business, but it has to be a selfie. Send it to me on Twitter @Denise G. Roberts. And be sure to use the hashtag #LevelUpSelfie. I'm Denise Roberts, your host, and I will see you next time on Level Up, the bully pulpit for small business.